So the windfall profits, they don't come around that often, but when they come, you've got to take action. So this trade and the next trade is another example of a windfall profit activity as well. This is Centro Properties. I entered into it when it came up. I actually set a stop entry order on this one. I was away on holidays at the time and I'd run my scan of an evening. So this share actually came up in my daily scan that evening, from which I would have seen at 3:30 that day, and I thought, great, it looks fantastic. It's just broken out of a trading range. If it moves higher tomorrow, I want to get in. So I set a stop entry order with an if done stop loss. And when I came home that night after being out, the order had gone through and I was automatically entered into the trade. Now, to start off with, the trade didn't do a whole lot. It moved a little bit higher and then it diddle-daddied around and then it took off. And it took off phenomenally well, doubling in price pretty much. Now, I was only looking at this chart end of day because I've been travelling on and off at this stage. Oh, gosh, there we go. I have to keep my hand on the mouse, I think. Sometimes I don't know what it is, it just takes over. Maybe I might have a timer set on the presentation. That might be why it keeps doing it after a set time. So this share rose strongly. I tightened my stop loss up. Because I wasn't there to sell out the windfall profits, instead I tightened my stop loss up. And you can see the lines underneath the candlesticks. There's a purple line which was my original stop. Then I tightened it up after the share moved up largely in a short space of time. And then when the share came back up and near its highs again and then fell away with the black candle and rejected it, I thought, this looks like potential for a double top here. I'm going to sell half because I would have liked to have sold half over here, but sometimes, as I said, I'm not around to trade every day. So I sold half and tightened the stop loss up on the remainder of the trade, and then I was stopped out of the rest of the trade because you just don't know what the share's going to do. It could have moved around and then it could have broken out again, and by selling half I'd still be in the trade. So I held that trade for 76 days and made a return of 131% on the total trade size, which was, you know, over 1,000% with the margin. It was a 10% margin, which means I had to outlay 90% of my money.
With this one, because you mentioned earlier about having time stops as well, like historically, if you look back earlier in that chart, you know, it really did look like it shifted sideways for quite some time on very low volume with low volatility as well. Then it broke out. And then what were your thoughts as the stock was moving sideways? Just after you entered, it was moving sideways again. Like, were your thoughts, you know, this might go on for the next few months, or?
Yeah, I have a 30-day time stop, so if after 30 days I have the choice, if I've got somewhere better to put my money into, I will sell this stock and move my money elsewhere. But if I'm not seeing anything I like, I'm happy to sit in it and maybe I will tighten my stop loss up.
Cool.
So it just, you know, I have the choice. And these are all judgment calls. So, you know, if there is something much better I've got my eye on, I will look at my portfolio and say, look, this one's at a time stop now. Let's cut this and put my money into this.
Yeah.
So, but I give it 30 days because my average hold time's 30 days, and I know there's a rule where you say use a third of your average hold time, which would be 10 days, but I found after 10 days, not a lot of moved sometimes, so it was just too tight. My winning trades could be held up to 90 days, I would find. So if I look at how long I hold my winning trades for and take a third of that, then I'm giving it a good 30 days. If the market becomes volatile and I'm not liking the trends of the market, I vary between 3 weeks to 4 weeks. So if there's a lot of volatility in the market and the market trend looks like it's changing, I will tighten my time stop up on things. If the market's moving nicely, which it was last year, it was in a beautiful bull market, you know, it's a nice time to be in it. Because as part of my weekly routine, I analyse what's happening with the market overall, the indices, the sectors, and what kind of market are we in.
Yep.
So there's a bit of a backdrop that I do there as well. Okay, so moving on to the next trade, this is Illumina. This is pretty much what most of my trades would look like if I don't hit a windfall profit situation. It's pretty much I enter in because it comes up in my daily trading system, and I will put support and resistance lines on the chart. I'll put trend lines on there. And like I said, if the resistance isn't immediate, meaning, you know, I can basically get a decent profit away, my stop loss would have moved into profit before it reaches resistance, I'm happy to enter that trade. But if it's close, then I won't take the trade. So the resistance on this one was far enough away for me to take the trade. It came up in my daily system. I liked what I saw. It had a gap move the day before, had a continuation move that day with a nice candle moving up with a gap again and strong volume. So I entered in. It retraced a little and then it took off very strongly. And it made new highs. It went all the way up to resistance, which was at $2. It's always amazing how they're at round numbers. And then it broke through the resistance and then it collapsed back in and my stop was hit. So most of my trades look like that. I enter because it came up my system, I exit because my stop was hit. The only times I do something differently is if I hit windfall profits or I'm trading a channel where I've identified there's a channel. If the share does not break above its channel line and looks like it's rejecting it and falling back, I have the right to sell out earlier.
Cool.
But most of the time, as I said, enter in because I get a signal, I exit out because the stop is hit. So that's a good example to show you what a normal trade would look like. And if this had have kept going higher, I would have stuck with it. So this trade I held for about 29 days, 7.5% return. It's not as fantastic as the other ones, but it's still better than having my money in a term deposit, and a 75% return on the margin. So it was, I had to put up 10% of my money for that trade. So going to the next trade, one steel, I wanted to also show a long-term trade. Unfortunately, because the market isn't maintaining its bull run at the moment, most of my long-term trades haven't lasted as long as I would like to see them last for. So I entered a whole lot of trades in mid-last year when the market started to take off again, and you saw a lot of shares that had been in those stage 1 bases and they broke out. And my weekly system, which I run on the weekends, brings them up in the scans. So this share had come up in my scan the week before, and then the next week I saw it. I decided I'm going to enter into it, so I waited till it broke above $3, and I entered in at $3.09. And I held that trade for 281 days, so it wasn't quite a year. And you can see on this chart I've got a 30-period moving average, a 30-week moving average. This is a weekly chart. I've got the uptrend line, and you can see my trailing stop loss. And I find that my trailing stop loss usually works in quite well with the break of a moving average and the break of an uptrend line. So I like my trailing stop loss, and if that trend is going to end and that stop gets hit, I don't want to be in it anymore. But unfortunately, I don't know the trend's going to end. I mean, you could say, well, it would have been nice to get out when it moved up here above $4 and fell back, but for all I know, it was going to move back to its trend line, and then it was going to move higher again. So I'm never going to get in at the top, I'm never going to get out at the bottom. So this is one of those long-term trades that I entered, and I was in this for a long period of time, but if I had taken it with my daily system, I wouldn't have been in it for that long, and I wouldn't be in it for the entire trend. So I made a 9.23% return on that one, and I also got some dividends along the way as well.